All right, so today we're going to be financial detectives. We're stepping onto the scene of well, let's call it a crime. The victim? A stock with the ticker KTTA. And believe me, it's been a bloodbath. So what's the story here? Let's crack open this case file. Whoa. Okay, just look at this. This right here is the heart of the mystery. You see that? 3 months ago, this stock was humming along at over $8. And today, it's cratered to just over $1. I mean, that is an absolute nosedive. The big question is, why? So, to figure that out, we got to do what any good detective does. We follow the evidence. We're going to dig into the technical report, think of it as our official case file, and follow every single clue to piece together exactly what went down. You can't solve a case without the right tools. For us, our toolkit is all about something called technical indicators. These are basically our financial magnifying glasses, our fingerprint dust. They're the things that help us find the signal in all the noise. So, what is a technical indicator? It's simple, really. It's a clue. It's a calculation based on a stock's past behavior. You know, its price, how many shares were traded, that kind of stuff. Now, they're not a crystal ball, they don't predict the future, but what they do give us is a really clear snapshot of what the market is thinking and feeling right now. Okay, so for this case, we're going to focus on 3 main types of clues. First up, trend. Pretty simple. Which way is the stock generally heading? Second, volume. This is a big one. How many people are actually trading this thing? And third, momentum. Basically, how fast and how hard is it moving? Now, we're going to really focus on those first 2, trend and volume, to figure out why things got so bad. All right, let's dive in. Clue number 1, a broken trend. This is often the first thing you look at. Is the stock's long-term health okay, or is something just completely snapped? And wow, this chart just says it all, doesn't it? That little bar on the left, that's the price today, hanging on for dear life at $1.06. But that big one on the right, that's its average price over the last 200 days. We're talking $9.22. This isn't a dip. This is a complete structural breakdown. And that's the key takeaway here. This stock isn't just having a rough week. It has completely detached from its own history. For any analyst, seeing a stock trade this far below its long-term average, that's a giant flashing red siren. It's like the entire floor just fell out from underneath it. Okay, so the trend is broken. That's clue number 1. But let's look at clue number 2, because this is where the story gets really juicy. The price drop is bad, sure, but the real question is, how many people were a part of it? And for that, we look at volume. Get ready for this number, 32. On the day of this report, the trading volume was more than 32 times its normal average. Just let that sink in for a second. That isn't just a few people selling. That's a flood. It's an insane amount of activity. So when you see a price collapse and a volume spike like this, well, the picture becomes crystal clear. This is pure, unfiltered panic. It's like someone screamed fire in a packed movie theater. Everyone is scrambling for the exits all at once. That's what we're looking at here. All right, so we've got our clues, we've looked at the broken trend, we've seen the insane volume. Now it's time to put it all together and figure out what the final verdict is. So let's lay out the facts one last time. Fact 1, the price is in an absolute freefall. Fact 2, the trend is completely shattered. And fact 3, the volume, it's a historic spike that just screams panic. You see? Every single clue is pointing in the exact same direction, straight down. This is what we call a textbook bearish case. But just when you think the case is closed, right? There's always a twist. There's one piece of evidence that just doesn't seem to fit. If everything is so obviously catastrophically bad, then why in the world is the overall technical score so high? Yeah, look at that. The score is 76.73 out of 100. I mean, in school, that's a pretty good grade. So how does a stock that is literally a 5-alarm fire on a chart get such a good score? And here it is. This is the key that unlocks the whole case. That score, it's not a grade for being good or bad. It's a score for clarity. A high score just means the signals are incredibly strong and clear. It means the market isn't whispering, it's screaming. And in this case, it's screaming sell. The high score just confirms how certain the market is about this downtrend. So let's put it all up on the evidence board. Our finding on the trend? Severely bearish. The volume? Extreme panic. And the final verdict? A confirmed high-clarity downtrend. The high score just seals the deal, telling us there is absolutely no confusion about what's happening here. And this really gets to the heart of what all this is about. We weren't trying to predict the future. We weren't looking into a crystal ball. All we did was read the room. Technical analysis is all about decoding the story the market is telling us today based on what millions of people are doing with their money. So I'll leave you with this final question. Our detective work here shows, without a doubt, a full-blown panic. But the real question for any investor is, when you see everyone running from a fire, are they smartly escaping danger? Or are they just panicking and leaving an incredible opportunity behind? The data tells you the what. It's up to you to figure out the why.